Hello guys, I welcome you all to today's video. In today's video we will continue from our topic, which is how to secure your profits whenever you are trading boom and crash. I started this topic 2 days ago, and it has been giving me positive results because so many people got to know about how they can secure their profit while trading boom and crash. People don't even know that they can secure their profits when trading the normal trend, but with this strategy they've been able to do so. So if you missed my first two videos on this, then you can go back to the channel. They are the ones in green color. You can see it, how to secure your profit trading boom and crash. This is the part one, and here is the part two. Of course, today's one is going to be the part three. But before I go fully into it, I welcome you all to Qora Digital Cash. If you are new on this platform, feel free to browse through my channel, watch some of my training videos, and make sure you do your personal findings. Make sure you practice and perfect your skills first on your demo account before you dive into the real account. This is very important. And of course, if you love my videos, can you give me thumbs up and share with families and friends? If you have any question about any of my videos, or probably you want to know more about my trading strategies, or maybe you would like to know more about any of my trading tools, feel free to contact me. My contact details are displayed on the screen, and I will be dropping them in the description box below this video. Okay, if you are yet to subscribe to this channel, can you do so right now? Check below this video for the subscription button. um Tap on it and also turn on the notification bell to all notifications. That way you always be notified whenever I upload a training video like this. Okay guys, let's go straight into what we have right away. So quickly, like I said, we are looking at how we can secure our profits whenever we are trading boom and crash. Okay, most especially when we are trading the normal trend. Like I said, there are two ways about this. It is either you trade it normally, or you trade it, you use this strategy using the spike. Most people know about this because when they are trading the spike, it is easy for them to use stop loss to to secure their profit. But when trading normally, the normal trend, then it is difficult to use stop loss because stop loss cannot hold spike. Okay, stop loss cannot hold spike, and that is why I'm dishing out a training on this so that you will know how you can hold spike, even on how you can secure your profit even whenever you are trading the normal trend. Okay, like I said, if you are to use this strategy for the normal trend, you don't trade it on 1 minute time frame, because on 1 minute time frame you might not have the opportunity to hold the spike the way it should. Okay, but you can start with 5 minute time frame. The reason is it is always difficult for you to have spike happening, a single spike that will happen and take over the whole of the 5 minute candles. Okay, the whole of the 5 minute candle. In most cases you will usually have like two spikes claiming the 5 minute candles, or three or even four spikes claiming the 5 minute candle. So this makes it very easy for us to trade. And of course, if you are sure of the trend, let's say you are trading crash and you are sure of the trend, and the market has been going up like this, this is your entry point. Okay, this is your entry point, and you've already the current price action has gotten to this region, and definitely you can introduce your stop loss to somewhere here at the middle. Okay, to somewhere here at the middle, because it is 5 minute time frame. It is difficult for a single spike to claim the whole of the profit back and even claim your capital. Okay, but let's say the first spike happened, it got to this level, um then this it went up a bit. The second spike happened, it got down to this level. Then the third spike now happened, and when it happened, it's got to your stop loss. Then definitely your profit will be, secured for you, the rest of the profit to be secured for you. The worst that can happen is, okay, let me draw another one, is that the what this is your stop loss is somewhere here. Sorry, your stop loss is somewhere here. Okay, the worst that can happen, okay, let's say the first spike happened, the second one happened, and the third one happened, and it got below this stop loss. Of course, like we all know, stop loss cannot hold the spike. Okay, this spike will actually push the stop loss from this region to where it stopped. So it's going to stop here. If it stopped here, then the stop loss we come down to this level, and from here it will close your trade. It will close your trade. That is what will happen. It will close your trade, and your profit between the new position of the stop loss and your entry point will go straight to your balance. So if any spike should happen again, you won't be in the market again, because you would have closed your trade at that point. Okay, so that is the way it works, and that is the benefit of you using higher time frame. Of course, I then when I first started with this strategy, well, a few months back when I started with this strategy, I used to use it on 1 hour time frame. But later on, because of my time and everything, I mean my busy schedule, I find it difficult to get the signal on time on 1 hour time frame. So I started trying out 30 minutes. Then later on I came down to 15 minutes. It was still working. Then later on I came down to 5 minutes, and I noticed that it will also work on 5 minutes. So far it is not 1 minute time frame. So, and that is why I enjoyed using this strategy, and it has always been fruitful to me, because it helps me to secure my profits, okay, even when I'm busy doing all that thing. So that is why I started with 5 minute time frame, because I will get the signal on time, and also I will still be able to secure some of my profits for myself while I'm trading. So let's quickly go straight into what we have right here. Okay, so that is all you need to know about you securing your profit on 5 minute time frame. For instance, okay, this is the normal trend. The trend between here and here is the normal trend, and what you need to do is, if you come in here, let's say you come in here and the current action price has gotten to this level, okay, you just need to wait for the current action price to move downward a bit, okay, because this is boom 1000. If it has gotten to this level, then you introduce your stop loss. Sometimes you will hardly get the spike getting to where your stop loss is, okay, a single spike or a single spiking candle getting to where your stop loss is. So what I will advise you is, after making some profits, you know that there is a noticeable distance between, or gap between, your entry point and your exit point. Then you can introduce your stop loss, divide the position, the distance, into two, and let your stop loss be in between them, okay, be in between them. So right here, this is the equal half, and this is where the stop loss will be. Let me change this color to white, so that we will be able to differentiate the lines. Okay, this is our entry point. The first magenta color is our entry point. The second one is the current. It is where the current action price is, and the white line is the stop loss. Okay, you can see there are some spikes that happened here. They didn't get to the stop loss, and this actually gave us 20-minute spiky period. You can see that is what I was actually trying to explain to you on the Jamboard, that in most cases these spikes will not even get to where you are. Okay, so and it came down again, and it came down to this level. What do? You still adjust your stop loss to this level. You adjust it a bit. That way, you are widening the gap between your stop loss and your entry point, which gives you more opportunity to trade this asset successfully. Okay, then as it is going down, you still adjust your stop loss. Okay, the reason why we are not closing up or narrowing down the distance between the stop loss and the current action prices, we want to give it the opportunity to play around the market so that it can spike. Not that it won't spike at all, definitely it can spike, but once it spikes, it shouldn't get to the stop loss. What am I trying to say? The small spikes shouldn't get to the stop loss easily. Okay, it shouldn't get to the stop loss easily. That is what I'm trying to say. So instead of you narrowing it down totally, give it some space, some breathing space. Okay, so that even a small spike will not get to the stop loss easily, because it is in the right trend. It is on downtrend. So let it go alongside and let's milk the market. Let's see if we can milk the market to the very end of the trend. Okay, you can see that it spiked here, but it didn't get to the stop loss. It came down again, spiked here again, still didn't get to the stop loss, and it went down. Okay, this is always sweet when you are in the right trend. Okay, and it got down to this stage, then you can still adjust the stop loss to this level. Okay, you can see the gap between year and year, so that is the profit you are securing for yourself. Okay, let's say you even brought it down to this level and it spiked up from here. Let's say you brought it down to this level and it spiked up from here, and the spike finished here at the top here. What it will just do is it will push down this um stop loss to this level, where the candle, the spiking candle, where it stops. Okay, it will push it backward to this level, and it will stop there, and it will close your trade for you. And the profit between this white line, which is the stop loss, and this magenta line, which is the entry point, will be your profit, and it will go straight into your balance that way. So that is the way it works, guys. It is very simple and very easy to do. All you need to do is to practice and perfect this skill, and you will enjoy it a lot. Okay, let's quickly check it out on 15-minute time frame, because I promised us yesterday that we will be looking at the 15-minute time frame today. Okay, on 15-minute time frame, it even makes it more secured, because we will have more opportunity. It is always difficult for a single spike to claim the whole of the 15-minute candle. So you would have seen the spike happening before it get to the stop loss. Okay, so far you are in the right trend, then you are good to go. For instance, let's quickly check out some of these examples. Okay, right here we got our entry point, and the market is on downtrend. We came in on this particular arrow. The market has traded for a while. It has gotten to this, let's say it has gotten to this level. Of course, because it is 15-minute time frame, you can always introduce your stop loss. Make sure you divide it into two. Okay, then you introduce your stop loss to somewhere here. If it should spike, a single spike will not get to your stop loss, and if it gets to your stop loss, then definitely it won't push it. It won't claim the whole of the profit that you have locked up before. Okay, it will never do so, because this is 15-minute time frame. It is always difficult for a single spike. So far you divide it into two equal hours, it is also always difficult for a single spike to claim, to get to your stop loss. So you can see it came down to this level. You can always adjust your stop loss to somewhere here. So you can see it spiked up, didn't get there, spiked up again, didn't get there. Then this time around it spiked several times, and it got to this level, still didn't get to your stop loss. Then later on went down. You can see after getting down to this level, you can still adjust this to somewhere here. Okay, somewhere here. Do not let it to be too close to your current action price, okay? So that you will have, I mean, the market will have the breathing space to play around, okay? So and it's also spiked here twice and still didn't get to the stop loss before going down, and it came down to this level. So definitely you can still adjust your stop loss to somewhere here if you feel that it will break the support region and continue with the downtrend. But if it does not, you can say if it does not, it's just the way it happened. It didn't break the support region. It's consolidated around there for a while, got to the tip of the stop loss, but didn't get to the stop loss, came down again. But this time around, two spiked happened and it's went to, I mean, it went above the stop loss, okay? But if you should check it out, this spiky candle got to this level, but I'm very sure it is not a single spike that got it to this level. Probably the first one would have pushed this one backward to this level, and it would have closed the market right on that level, okay, before the other ones will happen, which actually got the candle to this level. But apart from that, let's even say it is this candle that pushed the stop loss backward, okay? It will only push it backward to this level, and it will close the trade on this level. This second one, the third one, the fourth one, the fifth one will not affect your market. It will have closed your market at this level, which means the profit between here and here will go straight to your balance. It is as simple as this. All you need to do is just to make sure you practice with this and perfect your skill before you go on your trading account, on your live trading account, okay? If you think the 15-minute, I mean the 5-minute time frame is a bit risky for you, or you are a bit scared with the 5-minute time frame, then 15 minutes time frame will be a perfect way for you to get started with, okay? Because that has reduced the risk. Just make sure you have made some profits, okay? Just like, okay, this is the entry point and the market price has gotten to somewhere here. You can divide the space into two equal halves, and you place your stop loss in the middle, okay? A single spike will not claim the whole of the 15-minute time frame, I mean 15-minute candle, and definitely it will not get to your stop loss because the distance has been divided into two. And even if it will get to your stop loss, probably the tail end of the candle will get to your stop loss, and it will close your trade for you in profit, okay? In profit. So I'm sure of this because I've practiced it several times. In short, I'm still using it till date, and it is one of my biggest secrets of milking the market successfully, okay? You guys can also check it out, you can try it out, and you can watch this video over and over just for you to perfect the skill and make sure you practice and perfect your skill on your demo account. Then once you are done with that, then you can go to your real account and make some profit for yourself. So I will be stopping right here. Remember, this is coming to you courtesy Qora Digital Cash, and if you have any question at all, feel free to contact me. My contact details are displayed on the screen, and I will be dropping them in the description box below this video. If you are yet to subscribe to this channel, kindly do so right now and turn on the notification bell to all notifications. That way you always be notified whenever I upload a training video like this. So watch out for my next video. Until then, God bless you.